What's up everyone, it's Matty from Logic Effects, hope you're doing well, and today I'm going to bring you a video on the COT report and actually how to make the COT indicator like we have here. This is a COT indicator that we've developed here at Logic Effects. It includes all the main participants of the new COT report, and in this video I'm going to show you exactly how to make this, how to track hedge fund positions in the markets and give you a better edge when trading Forex. So this is what the COT indicator looks like in the end. And it might be quite new to you, but in this video I'm going to explain to you exactly how to use this and how to actually implement this into your strategy to create better probability trades. Now this is the US dollar index for the COT report. And essentially what it's doing, it's showing you the whole sentiment of the market from a hedge fund point of view. So if the hedge funds are wanting to go long, then you'll identify this in the COT indicator. If they wanted to go short, it'll be seen in the COT indicator as well. So if I quickly explain it to you, there's a zero line here, as you can see, that grey line in the middle, and there's a pink line called hedge funds here. And when the pink line is above the zero line, it means that hedge funds are going long. It means that their net open interest is long, and that overall the sentiment for hedge funds is long. And when it's below zero, so when it's down here, it means the net open interest is short. That means hedge funds overall are shorting the US dollar. And you can do this for various different currencies and then start combining them to create great timing mechanisms when you're entering your Forex trades. Now, you'll see that this strategy is really great when you apply it with a fundamental outlook as well, which is what we're going to be doing in this video. But as you can see, all the major currencies are on here. You can identify exactly where the hedge fund positions are in the market, and we're going to go straight into the video now on how you can do this yourself on Excel. So this is what it's going to look like on Excel. It's exactly the same chart but different colors. So in the blue we have the dealers, the commercials, asset managers in orange, and the hedge fund in the grey here. So that was very similar to the chart that we have here, right? So pink line is the hedge funds here, grey line is the hedge funds here. Exactly the same chart, going to show you exactly how to make it and how you can do it for all the different currencies in the Forex market. So the first step that you're going to do is actually head over to the CFTC.gov website that's over here. Now on this website, the Commodities Futures Trading Commission, the Commitment of Traders report, is released on a weekly basis on Friday. The report actually collects the data on Tuesday, and then they update it on every Friday. So basically, if you are analyzing the COT report, it's really easy on a weekly basis to just keep updating this to get an overall sentiment of the market from a hedge fund point of view. And that's what we're going to be doing in this video, focusing on the hedge funds, because the hedge funds are the most profitable participants in the market. They're in the market for speculative reasons, and that means they have the same objective as us as retail traders. So if you actually go to the explanatory notes, leverage funds are hedge funds and different types of other money managers and things like that. And they are trading on behalf of speculative clients. So they're in the market to make money, and that's why we're following them. That's why we don't really care about any of the others, but we're going to include them anyway in the indicator to show you exactly how it looks. So once you're on the CFTC.gov website, you're going to head over to this Market Data and Economic Analysis tab. Once you're on this tab, you'll identify Commitment of Traders, which is 2 rows down. So if you click that, you'll head to the Commitment of Traders side of the website. And here is where you can access all the information that you want about the commitments to traders. It's publicly free information online, it's released by the government, and you can access it all for free. It shows you exactly where the participants in the market are positioned, and there's actually a few little nuances that we need to go over. So recently, there's actually been a new report since I think 2006 to 2020, and that is the new COT report. But before, there was a legacy report, which was the indicator that you can see online, which is normally non-commercials versus commercials. But now in this new report, the non-commercials and commercials have been split further into more participants to give you a better representation of the markets. And that's what we're going to cover in here in this video, the new COT report strategy and the new COT report indicator. So once you're on the CFTC Gov website, the Commitment Traders tab, you'll scroll down the page and you'll go to the Market Data Analysis section over here. And in this section, you'll see historical compressed. Now you want to click that because historical compress means that they have compressed all the previous data into different Excel files. Now, as you'll see, historical compress has various different reports, like I mentioned earlier. They have the old reports, the new reports, disaggregated, futures and options combined, blah, blah, blah. We don't care about all these other reports, right? I'm going to show you exactly the report that we want to be going to. We want to go to traders in financial futures, futures only report. This is this section here that I've highlighted. Don't care about anything else, skip everything else, but just make sure you're in this section here because it's very easy to get mixed up in this area. Now, once you're in this area, these are all the Excel files which are up to date for the COT report positions that you're going to need for the COT report data and to make the indicator. What we want to do now is we want to collect all the available data that is given to us. And we're going to do this by clicking the 2006 to 2016 Excel file down there. So if you want to click that, that'll get the Excel data from 2006 to 2016 for the COT report. We want to do the exact same thing now for 2017. So click the 2017, 2018, 2019, and 2020. Now, once you've clicked all those, you'll have all those in a zip folder. It'll look something like this. FinFoot XLS 2006-2016. That's the 2006 to 2016 Excel file that you clicked. The 2017 Excel file, 2018, 2019, and 2020. What we want to do, so if I just open one of them up, we want to actually combine all these Excel files together because we want to get a combined view of all the data. We don't want it all split up and having to go to different Excel files and all that stuff. This is the 2006 to 2016 file. And to actually update the data, all we're going to do is open the other Excel file, right? We're going to open the other Excel file, which is the 2017, and all we're going to do is just copy and paste all the new data into this 2006 to 2016 one. If you click the top left row here, A2, click that cell. You want to go all the way to the right where it says foot only. Go all the way down to the bottom. Hold shift on your keyboard and left click this cell down here, which is CF2111. That means you've selected all the Excel data in this spreadsheet. Now, we're not including the first row because that's the title row and we've already got that in the previous. You want to Control C to copy, head back to the 2006 to 2016 Excel file, and then you want to Control paste it right there where the data ends on the old one. Right? So you've all done that, 2006 to 2016, and now it's 2006 to 2017 because we've now added the 2017 data. Okay? So you want to do that for every single Excel file that I showed you here. So you want to combine 2006 to 2016, 2017, add 2018 onto it, add 2019 onto it, and then add 2020 onto it. And then the final result will look something like this. Now I've highlighted this Excel column here. I'll give you a reason why in a second, but it'll look something like this. So you got the 2016 data, you go down, you got the 2006, you got the 2018, 2019, 2020, you've got it all here now, right? The data for the dates go all the way back. Now, Excel. A lot of you might not understand how to actually use Excel. Don't worry, I'm going to show you step by step how you're going to extract the data and how you're going to make the strategy indicator for yourself. So there's a few important things that we're interested in, and these are the column names here. As you can see, the column names are actually just titles of the data underneath. So you have the market and exchange names here, you have the Canadian dollar and the Chicago Mercantile Exchange, and that's literally just the title. And these will change as you go down for different data. So you might get the Swiss franc, the British pound, etc. all here, right? Then you have the date format, the report date, and all these other titles. Now we're not interested in all of them, right? To make the COT indicator, we're only interested in the percentage of open interest for the net long and net short of the main participants. and also the report date so that we can actually create a nice looking chart. So to identify that, we need to go all the way to the right of the COT report data, and you'll get to the section which starts saying PCT of open interest all. That's a short word for percentage of open interest all. And then when you go to the next cell, percentage of open interest dealer long all. That's the percentage of open interest of the dealer participants in the markets that are going long. And in the next cell, for short. The next cell, you've got the spread. The next cell, you have the asset managers. So I've now highlighted the participants that we're interested in. So what we're interested in is the 4 participants I mentioned earlier. What are the 4 participants? They're going to be the dealer intermediary. They're going to be the asset manager and institutionals. They're going to be the leverage funds, the hedge funds that we're most focused on. And we're going to have the other reportables in here. I've highlighted them in the Excel sheet because those are the participants that the CFTC government website explained to you. And that's the participants that we want to make the COT indicator for. And we want to focus on the hedge funds here. So if you want to go ahead, highlight column AQAR, and then you just want to go up here to the bucket tool and highlight it whatever color you want. It's just going to make things really easy to identify what columns we need going ahead. You then want to go to the percentage open interest of the asset managers long all, and then the percentage open interest of asset managers short all. Highlight those 2 columns by clicking the top column and then holding control, clicking the other column, and then go to that bucket tool again. And you do the exact same thing for these. So the lev money, which is the hedge funds, and then you have the other reportable, which are basically other reportable participants in the market, which we don't really care about. Go ahead and highlight those cells that I've identified here. So you'll have the exact same format as me. There'll be the columns AQAR, ATAU, AWAX, AZBA. Now once you've highlighted all that, we want to go all the way to the left, go way back. Now we want to highlight the report date. That's what I've already done in blue. Now, these are the main columns that we're going to need. You also want to highlight the markets and exchange names here. So if you want to go ahead and highlight that at another color, just highlight that in orange. So these are the columns you need: A, C, AQAR, ATAU, AWAX, AZBA. These are all the columns that you're going to need to make the COT indicator yourself. Now, to make it easier, what we're going to do is we're going to control and we're going to paste that into a new Excel file. And that's what we've done over here. So we've pasted that over here. And we've just extended the titles so that we can see what the titles of each column are over there. So if you don't know how to do that, it's just Control and then Control V in a new Excel sheet. If you don't know how to make a new Excel sheet, click this little button down here and that'll make a new sheet at the bottom. What you can then do is call this sheet COT filtered. If you just double click the name down here, you'll be able to actually change the name. And this is the data now that we're going to be using to actually start making the COT indicator. But there's an interesting column that I've added to each of the participants. So as you'll see, I've added a sentiment column for each of the participants. And that wasn't there before, right? So all you're going to do to actually do this yourself is insert a new column after the percentage of open interest dealer short all. So this will go in here. You'll insert it to the right of percentage of dealer short all. So you're probably going to highlight the percentage of open interest asset managers column because you won't have this column yet. You're just going to click insert at the top and that'll give you a column to the left. Now call this column dealer sentiment. After you've called that dealer sentiment, what we're going to do is we want to know overall what majority is the sentiment saying. So which direction are the participants actually trading as a majority? And to do this, we need to minus the percentage of open interest long from the percentage of open interest short for each participant. So to do that, we do equals C2 minus D2 for the dealer sentiment. So if you want to type that, equals C2 minus D2, enter. That will give you minus 1.6 because it's just 8.4 minus 10 minus 1.6. And then we want to do that for all of them underneath, right? To make things easier, go to the cell E2, the one that I've clicked right here. There's a little box in the corner, just double click that and it'll automatically populate all the cells for you below. Simple, right? Really neat tool. Now, what you want to do now is create this sentiment column for each of the participants that we've copied and pasted over. All right, so we now have to do it for the asset manager long and short all. So we then click the cell on the right of the asset manager short all. We want to click insert as new cell, and then that'll give us a fresh cell over here. We want to name that asset manager sentiment. We do the exact same thing now, but this time we're not minusing the long all versus short all the dealers. We want to minus the long percentage of open interest long all from the percentage of open interest short all of the asset manager positions. So to do that, all we've done is gone equals in the formula tab up here. The cell that's the percentage of open interest managers long all minus that from the percentage of open interest asset managers short all. That'll give us the value that we want down here, and that'll automatically populate after you double click that corner cell. Again, we do the exact same thing for the percentage of open interest lev money long all. We've inserted a new column here. I'll highlight that with boxes, and then we've done the same formula. We've done this blue box minus this red box, so we've done equals I2 minus J2 here. We've then auto populated all the data down by double clicking this little box down here. Right, you're all up to date. And then we then do it now for the percentage of open interest other reportables long all, the percentage of open interest other reportable short all. We call this others sentiment as a title. We've done equals L2 minus M2 to create an overall sentiment of the participant. Double click this cell here, this little square in the bottom right of the cell to auto populate down, and then we've automatically populated the formula for all of the data, as you can see, for each of the participants now. Great. So now we have what we need to actually create the COT indicator and to actually now apply it to your strategies. Now, I'm just going to say this now. The fundamental outlook of the market is probably the most profitable and the most, likelihood of working with hedge fund sentiment is what we're going to do in this, because hedge funds always use a fundamental outlook to the markets. They're always looking at economic data to generate their trade ideas, and we want to actually think like a hedge fund and then also follow their positions. That's what this COT strategy is all about. So the first step in all this is actually create a fundamental outlook. If you don't know how to create a fundamental outlook, we'll have a webinar in the link in the description below. If you want to go and click that, we'll give you an introduction towards fundamentals and then see if a fundamental outlook is for you, so a fundamental trading strategy is for you. That's part of the Elite Academy and Logic FX Academy. After you've got that fundamental outlook, you then just want to start looking at this sentiment, the hedge funds, and then technicals and things like that. And that's our overall premise of how to trade Forex profitably. So, going back to the Excel sheet now, we have the dealer sentiment tab. We now have the asset manager sentiment tab, right? You've all done this. Hedge fund tab, and then the other sentiment tab as well. So these are the four tabs, the four columns that we're going to need to create the indicator. So to create the indicator, what do we need? Well, all we need to do is highlight column B, hold control, highlight column E, highlight column H, highlight column K, which is the hedge fund sentiment, and highlight column M. And all we need to do is go to insert, go to your line chart option up here, go to more line charts, and then all we need to do is actually just click line chart. Just click OK actually, and we'll be fine over here. Now, as you can see, chart looks real messy. It's included all of the participants and it just looks like some paint. Now, to start filtering the data so that now, for say you want to trade the US dollar, we just go to the left over here. We highlight all the data, we click data up in this tab, and then we click filter. And that'll create these arrows for each of the titles here. We just want to go to the market and exchange names because now we want to filter by the market, filter by the asset. And to do that, go here, deselect all by clicking that box up here. And let's say we want to trade the Canadian dollar. We type CANA, so short for Canadian, and then we just click OK. See, that's ticked. That'll be the only one that's ticked. And now we've only got data for the Canadian dollar in the Excel sheet, right? So once we have that data, boom, we have a COT strategy indicator. Right now, it looks a bit messy because it's going back all the way to 2006. So if we just want a close outlook on to see what's going on in the past year, you want to actually click the date. See how there's this box around the date? Double click that box, the line, you'll get this format axis option on the right. Now you get a minimum bounds here, and that's what we're interested in. We'll just change that from 2006 on the right to 2019. Right? That's good. Click off it. There we go. We have a much more readable COT indicator right here. And as you can see, the hedge fund sentiment is in grey, the dealer sentiment's in blue, asset manager in orange, and other sentiment in yellow. And what we're focused on as traders is the hedge funds. We want to be following what the hedge funds are doing. We want to have the same outlook as the hedge funds because the hedge funds are in the market to speculate, they're in the market to make money, and they're also in the market as profitable participants. And in this case, the hedge fund line has gone from a negative -20, it's gone up to just about 0 here, gone back down, gone up, gone down, and now it's in the negative range, which means hedge funds are what? Hedge funds are shorting the Canadian dollar. All we need to do now to update this chart is just keep on going to our market filter and just deselect all, clear the market filter. You want to then just type in what you want, Australian dollar. Click OK. Now you've only got Australian dollar data. That is not what I want the chart to look like. So as you see there, the chart got hidden because I filtered the data. Now that might be a problem for you going forwards. Now to get rid of that problem, what we're going to do is move the chart. So right click on the chart, move the chart into a new sheet, and that'll be named chart 1. In this case, I've moved the chart and I've named it COT indicator down here. So it was chart 1, this is what it was called, and I've just renamed it COT_indicator. And this is exactly the same chart as before, but now what we can do is just spread it out to make things much more easier to read. So now we want to go and trade the British pound. Ooh, spelled that wrong. And then you'll see the participants here, the market name here. What we want to do is click the British pound sterling. Okay, that's giving us all the COT data for the British pound. And as you can see, the COT indicators changed. We have the dealer sentiment, the asset manager sentiment, the hedge fund sentiment, and the other sentiment again. This time round, again, hedge funds are shorting the British pound. But before, in early 2020, they were longing it. And as you can see, this is a great mechanism to actually start using in your Forex strategy, your fundamental outlook, and then confirming the trade ideas that you have, but also stopping you from entering bad trades. So overall, what the COT indicator will help you do is to identify trades that are with the market and identify trades that are against the market. You never want to trade against the market as a Forex trader. Everyone should already know this. You always want to trade with the market and with the trend, things like that. Turning points, also good. COT indicator can identify exactly that. So when hedge funds are going from negative to positive, that could be a potential early confirmation of a turning point, as long as your fundamental outlook is also signaling that turning point before it. Because COT indicators, they can't be used to, forecast a market because they're lagging in nature. They were reported on Tuesday. and they don't always work. The hedge funds could be hedging, and what you want to be doing is, first of all, getting the fundamental outlook where they want to be making money. That's why you need to do the fundamentals first, because they're going to do the fundamental analysis to try and make money. You want to do the fundamental analysis to try and make money. They're going to then plot their positions to the CFTC government. You then want to check the CFTC government website to see where they're positioned. If that positioning is confirming with your fundamental analysis that they're in the same direction, then that could give you the green light to go. That could give you the green light to trade. That could also mean that there's a potential fundamental trending market coming up. Now, as you've just done all that, it might be a bit much to take in. We've actually created this exact same template for you to use in the description below. If you want to get that, there will be a coupon code COT99, which you'll get up to 99% off that Excel sheet. Definitely take advantage of that, because it'll save you a bunch of time if you don't know how to do this already. And what we're going to show you now is just some prime examples of how useful this COT indicator is, and then actually how we're going to combine data from different COT reports. Because yeah, it's great to look at one asset, right? One hedge fund sentiment for that asset. So in this case, we're looking at British pound, just the British pound. But to trade Forex, we need to trade currency pairs. So in this case, we might have to trade GBPUSD. If we wanted to trade GBPUSD, we'd have to then look at the US dollar sentiment as well, right? So to do that, we'd type in dollar, we'd untick all the ones that we don't need, and click US dollar. That will give us the US dollar, and then we have a sentiment, hedge fund sentiment for the US dollar. As Forex traders now, the next step is to combine the hedge fund sentiments of currency pairs. So I've done an example for you down here. How do we do that? Well, all we need to really do is copy the date, copy the hedge fund sentiment for one of the currencies, and then copy the hedge fund sentiment of the other currencies. In this case, I've copied the date for all the COT data. I've copied the hedge fund sentiment for the Australian dollar, and I've copied the hedge fund sentiment for the US dollar. So to do that, all you need to do, clear this, type in Australia, yep, get that dollar. We want to copy and paste this, and all we want to do is go ahead and highlight the hedge fund sentiment here. We only need those two columns. Control C, go into the next sheet down here. So you create a new sheet, paste it in, and you'll have these columns here, A and B. Now we also want the hedge fund sentiment for the US dollar. We go back to the Excel sheet with all the data in. We clear all the filters. We then type in the dollar. We deselect all the ones that we don't need again. Click US dollar. Now, this time round, we don't need to highlight the date because we've already got the date. All we need to go ahead and highlight is the hedge fund sentiment over here, because we want to follow the hedge funds in the markets. We Control C. We go back to the new sheet over here, paste it in, and that'll give us these three columns here. I've also aligned the price data of the exchange rate AUDUSD. Now you can do this really easily on various websites. All I've done is made sure to get the data from 2006, and then all the way to current date of 2020. And just make sure that you collect that data on a weekly basis. You can actually highlight that on investing.com. On a weekly basis, just copy and paste that data. Now, as you can see, what we've done is created a new chart. We've created a chart to compare the hedge fund sentiment of the Australian dollar against the hedge fund sentiment of the US dollar. Now, if we're to trade the Forex pair AUD-USD and we want to short the Australian dollar USD because the fundamentals are saying to short, what do we want the chart to look like? Well, if we go to the chart over here to the right, we want it to look exactly like this. Let's say in 2018, at the start of this red line here, we want to short AUD-USD. The blue area chart down here, so the blue line down here, is below the 0 mark, and the orange is above the 0 mark here. What does that mean? Well, it means that Australian dollar hedge fund sentiment is short because it's below the zero line. Remember that. It's below the zero line, so it's short. And the hedge fund sentiment for the US dollar is long because it's above the zero mark. And that's the exact confirmation we want when we have that fundamental outlook to the markets. Because once we got that fundamental outlook, we want to confirm that there's a trend coming up and that all of our indicators are also signaling the same thing, right? And that's exactly what we've got right here. Throughout the period 2018 to 2020, literally close to date, literally up to 1 to 2 years, the hedge funds have been shorting the Australian dollar and hedge funds have been overall longing the US dollar, which correlates now to AUDUSD 2018 to 2019 downtrending throughout that whole period, as you can see in the red arrows down here. It downtrended throughout that whole period from an exchange rate of 0.75 all the way down to 0.6, and that is massive. That is a huge potential gains that you could be getting with these long-term moves. And that's the most sustainable way to trade Forex as a retail trader. I've got some more examples coming up. The COT hedge funds, COT sentiment against the NZD US dollar, and then exactly how did we do that? Well, we went back to the COT, all the COT data. We went and filtered it for the New Zealand dollar over here. So you type New Zealand dollar, okay. We copied the date again, and we also copied the hedge fund sentiment. We went back to the COT versus NZD USD. We pasted that in. Did the same thing for the USD dollar sentiment. We got the price data on a weekly basis for the NZD USD. And then we plotted the chart here. So to plot the chart, actually, I don't think I actually showed you how to do that. All you need to do is highlight all the data. We go to Insert, Line Chart, More Line Charts. This time round, we go to Combo Chart at the bottom, and it looks something like this, right? We'll just change these to area charts because it looks a bit nicer. So the New Zealand dollar hedge fund sentiment is an area chart, the USD hedge fund sentiment is an area chart, the price data is a line chart, but the price data we want on the right hand side, and that's how we do it. And that's how we created the chart, as you can see to the right. And all we've done then is highlight, we've done the same thing to just get the recent data from 2018 to 2020. And as you can see, between 2018 to the start of 2019, hedge funds were shorting the New Zealand dollar, but longing the US dollar. That was seen in a huge downtrend here. Again, between 2019 and the middle of 2019, hedge funds started to short the New Zealand dollar again, and then start longing the US dollar still. As you can see, as the positions start thinning out though, so as they got closer to zero, the exchange rate also started to congest. But again, they went back into a short position. The blue line went down to went below zero. New Zealand dollar hedge fund sentiment was below zero. What started again? US dollar hedge fund sentiment went above zero again. Massive downtrend again. Recently, there's been a congestion again because the sentiment has started to slow down. They've started to actually take the opposite sentiment. New Zealand dollar sentiment is short here. So from 2019 to 2020 it was short, but from 13/04/2020 the hedge fund sentiment, so the orange line, went from a positive to a negative number. Now when it went into a negative number, it means that they're actually selling the US dollar, not longing it. That was my bad there. They're selling the US dollar, which means there's a weaker US dollar, which means there's a potentially stronger New Zealand dollar. And that's what happened here. Sorry about that, that was my mistake, but just clarify that here for you now. So when hedge funds are shorting the New Zealand dollar, when the blue line is below zero, then you'll tend to see the exchange rate go down. It's also combined with the hedge funds longing the dollar at the same time, because to be really confident, you want the hedge funds to be shorting the base asset and then longing the quote asset, right? So you want for the NZD USD pair, you want them to be shorting NZD, longing USD. If it was AUD USD, you want to be shorting AUSD, you want to be them shorting AUD and then longing USD. Let's go to another example. COT versus GBP AUD. What do we have? Well, let's have a look here. A little bit different here. AUD sentiment is in the blue. GBP sentiment is actually in the orange. And then what we're going to identify is that when the GBP sentiment was above 0 and when the AUD sentiment was below 0, the GBP AUD exchange rate started to go up. And this is obviously confirmed by the fundamentals that are driving the ideas, because if they're not driving the ideas, a lot of the times you'll see this fail. What happened when the GBP sentiment went below 0? The GBP started to depreciate. As you can see here, it started a downtrend. What about when they started flipping up again? Started to uptrend. And as you'll see, as you start actually looking into this data, this is a current trend that you'll see go on. And it's exactly why Forex traders need to start using this COT indicator in their strategies and actually start applying it to their Forex trading. Now, to update this data, all you need to do is do the exact same thing. So go back to the CFTC government website, and this time round, all you need to do is click the 2020 Excel data and then copy and paste the most recent date. So if you went into Excel and you actually downloaded that data, you opened it up, you'll only want the weekly data for that week. So to do that, you just open it up, enable editing, create a filter, Control A, data, filter. You now only want the data that is the most recent 2020. So you go, so currently the date is June 23rd, and that's the most recent data. Now, next week there'll be data that comes from July, and you want to click that one. And that's exactly what you'll do. You'll filter all that out. You'll click into 2303, and then now you have all the data for that week. All you need to do again, Control A, copy and paste that over into the Excel sheet that we have below. You don't want the titles, remember, you don't want this first row, so just click that one, go all the way to the right, go the way, Shift, left click, Control C, and then you want to paste that into the bottom of this Excel document down here, and that'll keep you up to date every single week for the COT strategy indicator. And that's exactly what we've developed here at Logic FX. This is automatically updated for our members on a weekly basis, so you don't need to worry about copy and pasting stuff every week. If you're actually interested in, starting to apply that, do make sure to attend that fundamental webinar, and we'll also give you a call to see if this is for you. If you're struggling as well on creating that fundamental outlook to the markets, we actually have a currency macro currency strength meter, which will give you that initial fundamental outlook. So as you can see, on a fundamental basis, we may want to be shorting the euro against the US dollar. We may want to be longing the pound against the Japanese yen. And then we then go to the COT report and the COT indicator in our portal. This is what I've just showed you exactly how to make now. We then want to see what those participants are doing as well to confirm the ideas. And that's the basis of what you're going to learn in the Logic FX Academy. Do make sure to subscribe as well, because we are a new upcoming Forex channel. We're looking to grow and provide lots of value to you all. So if you did find this tutorial useful, do make sure to subscribe. Remember, if you don't know how to make this Excel sheet, you can't be bothered to make this Excel sheet, we do have a template in the link in the description with a coupon code COT99 for you to get up to 99% off it as well. Do keep a lookout. So this is going to be one of a part 2 series of the COT strategy indicator. The next video I'm going to actually cover the legacy report, which is the non-commercials versus commercials. In this one, I've covered the new COT report and how to follow hedge fund positions in the markets, how to actually profit from the markets with these examples here. And yeah, so the next one's going to be the non-commercial version, which you'll see a lot of indicators online for it as well. Thank you for watching. Again, make sure to subscribe. If you have any comments, make sure to comment them below. Give this video a like and a share. Would really appreciate it, and it will really help me stay motivated and keeping these videos up to date with you all. Make sure to keep an eye out for part 2. Subscribe, click that bell icon. I'd like to see you there in the next video. Thanks for watching.